Good evening, good people. It is your main man, H Cortez, the one and only financial health mentor to the working class. And I am here with your favorite CPA, my main man, Pierre. And tonight, although it's rather late in the Midwest, it's just beyond dinner time out west. We're going to talk to you about using the tax code to build wealth and why more and more people should be looking at a home-based business to start their wealth portfolio. So, Eric, my man, how's it going?
Oh, it's going great, man. It's 75 and sunny out here in San Diego, so just another day.
Whoa, I'm jealous. It was like 97 here in St. Louis, and when you're
Oh,
surrounded by concrete and it's 97, that's a problem.
well, that's why you need to move to Chicago, where I used to live. At least there's scenery there.
Yeah, yeah. Not enough water around that joint to keep it cool, man. But then I have to deal with those winters, man.
I
The
know
one
that's
thing
why
I
I
have to
moved.
deal with here in St. Louis is the inconsistency of weather. It might be 40 and snowing one day, and then 65 and next, and this could be in the middle of January. So I'd rather deal with that than the blistering cold and wind of Chicago.
Yeah, well, there's a reason why I left Chicago. It's because of winter. So my goal is to build wealth so I can have a summer home there. Those 10 weeks in summer are beautiful.
Cool, cool, cool. I definitely have to get over there and visit. But tonight, let's get down to business, man. For me, as a wealth strategist, I'm always encouraging people to start a home based business primarily because you can minimize your taxes by having a home based business. But like I know, so many people are so afraid of the IRS that they
Uh-huh.
don't want to make that move. So tell the people why it's nothing to fear and why it's a good idea to have a home based business and use that as a way to start building wealth.
All right, Cortez. First of all, thank you for having me. It's a pleasure to be back with you. Tax season kind of took
Yeah,
me away from that in the TV show here, San Diego Neighborhood SD. Just want to give a shout out to my producer Ty Hines. Thank you for having me on
awesome.
for season one. To answer your question, when you hear the IRS, it's scary because think about the country's history. The IRS is who brought down Al Capone, by the way. Okay, it wasn't the FBI; it was the IRS, the tax
Hmm.
authority. So people know
Right.
that they're actually the most powerful governmental agency in the country. But that said, the IRS
Hmm.
has acknowledged that home-based businesses are growing more and more and more and more.
Hmm.
Corporations that hire employees. One of my tax clients here in San Diego, he actually is a home-based employee, and even for those home-based employees, corporations, they do get some tax breaks. But the IRS, you
Hmm.
shouldn't be scared because most tax returns that have taxable income of $200,000 or less have a 1% less than 1% chance of getting audited. So
Wow.
yeah, so so people shouldn't be afraid. And a home-based business is considered legitimate business because if you have the intent of making money, which is what the
Hmm.
IRS defines as business, then you can take advantage of the 475 tax deductions that are available for business owners.
Exactly. And that's what I try to stress to people because when you think about it, and most people don't think about it in practical terms, but your tax liability is your biggest expense.
Yes.
When you think about your income tax, you think about your real estate or property tax if you're a homeowner, you think about sales tax on everything that you're purchasing, you think about the tax on gas and um, all of those different taxes. So by the time you uh, finish as a traditional employee only, then you're taxed at almost 50% of your income.
That yes, that's correct. Because and you guys at myEcon talk about this. When you're W-2 employee, you're taxed a lot more because you cannot write off your lifestyle. And we discussed this in the
Hmm.
book Financial Health Traffic Report. And if you haven't read it, please go read it. Where I wrote the forward, and my host here did a great job of breaking it down in the very simplest form. But
Thank you.
the our society is designed for business owners. The tax law isn't was intent was written for the benefit of business owners and not for employees. And the purpose of that is so that business owners can expand their businesses and then hire people so that the workers fund the U.S. Treasury. Because the IRS wants to give business owners tax breaks so that they can say, well, here, since you're bringing in all this money to our community, I'll give you this concession knowing that I'll get my money back from the people that you hire. That's the best way to explain it. And so people want to think of, it's not trickle down economics. It's called push down economics. Push down the, you said this in a blab session, so I'm going to say it. Capitalism is those that do capitalize on those that do not. Plain and simple.
Right. That's it, man. And it's not terribly hard, but yes, I was explaining in a short video series that I was doing not too long ago, those sentiments exactly is the W-2 wage earner does not contribute to capitalism.
No.
So as a result, they don't get rewarded. The business owner does contribute to capitalism because it provides employees for the government to tax. And then the investors are taxed even less because they provide the capital to business owners when they need to expand infrastructure, expand their product and inventory. And when that expansion happens, those businesses hire even more employees, and that gives the the government more people to tax. So talk a little bit about what an audit really is, because I believe most people have this part confused too, because I hear all the time as I'm explaining to people, hey, you can write off your lifestyle, and the first thing that comes up is, no, I don't want to be audited. But even if you do get audited, tell the people exactly what an audit is and why it's nothing to fear.
Okay, well, an audit is just a review. The origin of the word audit is to hear. So when the IRS sends you letters to audit you, they basically want to hear how you came up with your tax return. And so the best thing to do is to hire a good CPA. And just to give you an example, Cortez, I've actually been mentored by a well-to-do CPA in Los Angeles, David. And, we discussed, for instance, writing off for assets. And with a CPA, there are certain things that they can do to help you reduce your chances of getting audited. But just because you're audited doesn't mean you're wrong. It can be a burden. However, if you keep your documentation, you keep your receipts. For instance, meals under $75, you can keep your receipts. You don't have to have a receipt. As long as you have good documentation, by equation, you keep that documentation, you show that it's in service, you're using it for economic benefit, you'll pass your audit.
Right. So yeah, that's an excellent point that you bring up, is that the audit is just a review of your documentation to show the IRS why you feel that the deductions you've taken are legitimate.
Correct.
And
can I tell a quick story? Let me give you an example. I want to give a shout out to a colleague of mine, Big Al, all day. Following him on Snapchat. So Big Al is an accountant. He's a fellow accountant here in San Diego. One of his clients got audited. After the audit, the IRS had to give his clients some more money back.
Wow.
Yeah, but you don't hear about the stories in the press.
Exactly, because that's part of perpetuating the stereotype and the mysticism behind the IRS as an entity. But at the same time, that mysticism is being promoted by the media and those who don't know. The IRS's own documents say that most people are overpaying their taxes on average of $40 to $60 per week too much. And instead of getting a big tax refund, they should get that money back and use it to pay down debt or invest. What do you think about that as a strategy?
Hey, can you say that again? Sorry, my phone went off and interrupted me.
Yeah, in 2005, they released a memo on irs.gov, and it talked about the fact that most people are overpaying their taxes on the average of $40 to $60 too much.
Yeah.
And instead of getting a big refund, they said most people would be better off using that money to pay down debt or contributing to some sort of investment fund. So what do you think
I
about
agree
that
with
as a
that. Let me do a
strategy?
quick calculation. If you take, what do we have, like 370 million people in the United States?
Mm-hmm.
Okay, so you take 370 million, and let's say $40. That's an overpayment of 1.48 billion. So if we take that same
Wow.
number on the high side, it's 2.2 billion. So people are overpaying by $2 billion. That's correct. A lot of people just don't understand the tax code. A lot of people are scared of hiring, adequate tax professionals because there's a stereotype of the CPA. You have to be this, rich, older Caucasian male.
Yeah.
But
Yeah.
in most instances, the CPAs charge the same rate as HR and block. It's just that people don't know that, and part of it is just that as CPAs, we don't, in general, and I'm not trying to say this to knock my profession. It's just that we don't tend to advertise our prices because um, you don't want to put out the information
Mm-hmm.
to there's a perception in our profession if we put our prices that it devalues our profession, and so
Well, and then with you guys, you aren't some cookie cutter operation either,
no,
in a sense that you're not just going to file the simplest form that you can file
no,
and force everybody down that path. You're going to take a good hard look at
right.
the overall financial picture and not only get someone taxes filed, but also help them throughout the course of the year
Right.
in making the right decisions as it comes to write offs and things like that, right?
Yeah, that's correct. Because what people don't understand, and again, I know people that work in HR block, so it's not to knock them when I say, but this is the reality. Reality is the purpose of the places like HR block, Jackson Hewitt, is to go through tax return as quickly as possible. And when you use
Hmm.
some of their software or you talk to them, there's certain things where they will say, for instance, if you own an investment property and you sell at a loss, the tax software will say at the top of the CPA. I know this is I got a client out of that.
Uh-huh.
And so, HR Block is a business. Jackson Hugh is a business. I'm a business too, but their business is they hire people that do not require to have you do not have to have a college degree to be tax prepared. That's according to IRS law. You don't even have to have a college degree to be an enrolled agent. And I do work with enrolled agents. Now they get certified by the IRS, but you do not
Hmm.
have to have a college degree. A CPA has to have a college degree. You have to have so many hours. You have to pass the exam. You have to do all this continuing education every year. So we're the highest scrutinized group out of the taxpayers out there. And CPA firms, because that scrutiny, it's in our best interest. We're supposed to be in it for the interest of the public and not for the bottom line. And that when we provide value, that's what we make our bottom line. Now, yeah, are there bad CPAs? Absolutely. Are there road agents that are great? Absolutely. Because I'm partnered with one in Houston. He's a great, tax analyst. There are tax preparers that are on the game, know the tax code better than CPAs that I know. Some of these tax preparers know
Hmm.
certain things more than me, but when we get to CPAs, we also get in these specialized niches. There's certain CPAs that specialize in small business, like myself. I work with small business entrepreneurs primarily. There are CPAs that
Okay.
work in specific sectors. There are CPAs that work with just entertainers. There are CPAs
Right.
that work in construction. So now you get to more specialized. And so some of those
Gotcha.
guys charge a lot, but there are CPAs that, such as myself, that we charge the same as H&R Block. It's just that
Right.
people don't understand and aren't willing to take the effort. And HR Block, to their credit, has done a great job of starting in December, saying January is refund season, and you see the making it rain, and you see the flashy
Yeah.
cars.
Yeah. Get your billions back,
Get your
America.
billions back, America, and they're not really helping you get your billions back, America. They're part of the problem because they've
Right.
lobbied Congress to have things designed a certain way so you can get a quick refund, but they're not even going to
Hmm.
advise you that you can start a side business to write off some of your expenses. So
Right.
that's the difference.
Exactly. Exactly. And when I said get your billions back, that made me think about, um, one of the concept and the strategies that we teach also is that they will H&R Block advertising and one of their biggest campaigns has been that get your billions back, America. slogan and campaign. But we teach, on the other hand, don't give up your billions in the first
No,
place. So,
no,
so
because
let's
you're just
talk a
getting your
little bit
change back.
about, yeah, because you're just getting your change back. Exactly. So let's talk a little bit about the W-4 form and what that really means. And again, this is a situation where people are misinformed.
Right.
They're filling it out of fear, even though all they have to do is answer the questions truthfully according to how the question applies to their life.
Yeah.
Most people are still going to their HR folks when they get a new job, and they're putting down that they only have one allowance or one dependent and leaving it at that. So let's talk a little bit about how that could affect them negatively as they are seeking that big tax refund.
Yeah. So, uh, what some people need to understand is that legally, HR professionals cannot advise you on how to fill out that W-4, even though they do know what that means. But by law, they're not supposed to, or company policies do not allow them to do that. So, for my friends that are wage earners, stop asking your HR professionals how to fill it out. They're not going to tell you. There's too
Right.
much liability risk in that. This is a matter of fact. But again, part of it is that our education system. When you go to school, you're not going to school. They don't teach you the W-4 form. I didn't learn that in business school, by the way. I didn't even learn what that meant, so I had to go work on my own as an accounting major.
Wow.
They don't teach you the W-4. You know,
Wow.
I took a tax
Crazy.
course. Yeah, I we never went through it. You know, we had to do a sample tax return as a case study, but they don't teach you that because if people understood that, then the U.S. government wouldn't get the money that they get to keep. This is,
Right. Right.
and remember, our system is based on consumerism and capitalism. It's not, our system is not
Hmm.
meant for any of us to build a business. Our system is meant to build for somebody else other than you and your family. So the best
Right.
way to do that is that you can, people can even go Google. You can some of this information is based in Google, but people are scared of doing that because they're afraid of doing it wrong. So it's easier to put one and get a refund back. But the thing is like, so Cortez, if I'm a bank, would I loan you money interest free?
No.
Right. Even though I'm not even
Not
giving you
at
much
all.
interest for the savings account, I'm gonna charge you what? Was it 2-3% loan? What's the prime? Maybe 0.5%. I don't remember the rate. I've been working so hard.
Yeah. Yeah. You're gonna charge me
I'm gonna charge you
a
something.
good amount.
Right.
You're gonna charge me as much interest as I'm willing to pay if you're a bank.
Right. I mean, and it's right with credit cards, same thing. But yet we loan
Hmm.
the government money interest free. But the thing that people should think about when you get that refund, they take their sweet time to pay it back to you. There'll be
Yeah.
convenient glitches on the e-file, and
Hmm.
you do it paper. But when you owe money, they will come find you quick.
Right, exactly. And then the other thing that you look at too is, like you said, getting your change back. Sometimes you will look at what has been taken from you in taxes,
Hmm.
and a lot of times when people are not in the know,
Right.
they will look at a $5,000 tax refund and jump for joy. But if you look at that last paycheck stub and all of the taxes
Wow.
that came out, you may have had 12,000 come out, and then you're only getting 5,000 back. So
Right.
to understand that form is extremely critical in the sense that 3 out of 4 Americans are living paycheck to paycheck.
Right.
So to uh, give too much money to the IRS just so you can get a refund every year, you could relieve the stress of living paycheck to paycheck if you had that. In my case, it was $275 a month that I was overpaying.
Yeah.
Got that money back and started using that extra 275 to eliminate some debt. That cleared up a lot of stress in in my life. So a lot of people can use
Yeah.
that method instead of waiting for a big refund, because 8 times out of 10 you get that big refund, you're not going to pay off any debt with it, you're not going to pay any bills with it.
No.
Most likely you're going to go buy a piece of junk car, or you're going to buy a piece of junk jewelry, or you're going to buy a big screen TV, or you're going to do something because you felt like you haven't had money throughout the
That's
year. So when
that's
you
correct.
finally get a piece of it, you're going to feel like you owe yourself something. Well, we teach that yes, you do owe yourself something. Give it to yourself each and
Right.
every month, and not just wait until the end of the year and give it a piece of it back in a lump sum.
Yeah, no, that's absolutely correct. And again, it's just lack of information. Even some of the firms that I named, like Jackson Hewitt, they do have estimators that you could actually do a calculation and look at yourself, but it's too hard. And
Hmm.
talking about money in general, Cortez, is I had a financial advisor here in San Diego tell me that talk about finances can be considered more intimate than sex because you're revealing yourself. So people don't even want to have to reveal themselves to themselves. We're not
Right.
honest with ourselves as men. Look in the mirror, we can be overweight, but we're looking like, oh, look at me, I'm still cut like 10 years ago, and yet you're really flabby.
Right. Right. Yeah. And you know what, the way I like to say it, Eric, is that in America, because of pride and some other insecurities that we have, is that we're all struggling financially, but we've become really good at covering it up.
Right.
And we spend so much time covering it up that we don't spend any time looking for real solutions to fix the problem and get it fixed once and for all. We'd rather continue living our lives trying to cover up, live a lie, put this happy face on, look good, smell good, but walk out the house every day broke.
Absolutely. It's just living a lie. I think the average American has $5,000 credit card debt, has some like 60, 70,000 mortgage and whatnot. And so, we're just a debt driven society. It even starts up top with the government. Look how much debt we have. And
Yeah.
and then again, you also remember, and you pointed this out several times in your post, you know, guys like Donald Trump, Mitt Romney, they don't want, when candidates are asked to release their tax return, they're very reluctant to do that because then people would be
No.
shocked to see that their effective tax rate is 5%, 10%.
Hmm.
Some of these corporations don't like having their tax returns released. I think GE doesn't pay any taxes because then people are going to start wondering, well, how
Hmm.
are they able to do that but not me? Because again, capitalism, the people, those that know, capitalize on those that don't know. And most of us don't know. Our school system is not set up to financially educate you about these things. But yet some of these things are very simple to implement. And also, one thing that I learned recently in a training called Bold that I took with Keller Williams here in San Diego, they're generous enough to
Hmm.
invite me. So shout out to Keller Williams San Diego, Coastal Central. Thank you, Micah and Jamie, for inviting me. Most of us say that we make moves towards pleasure, but statistics have shown that 90% of us make decisions to avoid pain. Because the truth
Yeah.
is that if
Yeah.
we were to make moves to pursue pleasure, more people would at least have a home-based side business because the tax code allows you, with a home-based business side business, if you're at least a sole proprietor, you can start
Hmm.
having a home office which the IRS allows you to write up to $1,500 a year. You can write off some of your internet legally, some of your mortgage
Hmm.
or rent legally, and
Exactly.
reduce your tax burden just from that.
Right.
And you can have less withholding your paycheck to keep more money, and still have to either cut a small check or even get a little bit of money back. But if you got a
Hmm.
$3,000 refund because of your side business, that's a lot better because you spent money to invest in yourself and now you're being rewarded versus you get $3,000 to do anything. So, for instance, these computers that you and I are using, the tax code allows us to write it off for our business. Why? Because there's a tax law, Section 179, and Congress revised it under the PATH Act in December. Businesses can write off up to $500,000 of equipment tax free before they start reducing your write off. And when you go over 500,000, you get a bonus depreciation as they pare down your write off. You get bonus depreciation, so you get some big tax savings there.
Right.
But most of us that I was a W-2 employee for years. When I bought this computer before I had a business, I spent a couple $1,000s. I didn't get to write that off. I wish I did.
Wow.
Now I recently
Yeah.
bought a new iPad because when I go do my Ask Your Favorite CPA and I use my iPad for when I'm away from my
Hmm.
office or home, I can write that off because it's for the purpose of business. I use that for presentations.
Exactly.
Yeah.
Exactly. And people don't realize that that's key And one of the major differences is in having a home-based business versus a traditional business is in a traditional business, you're going to go get a new lease
Right.
on a building. You're going to go get a new lease on some equipment. You're going to go, get a new telephone line for that business, maybe a fax line for that business.
Right.
Maybe you're going to get cell phones for your employees or whatever. As a home-based business, you already have all of these expenses.
Right.
And from our studies, from the associates who are partnering with the young wealth builders in myEcon, the we're talking about a savings of anywhere from $8,000 to $12,000 per year on average.
That's correct.
Now we know the number one reason people don't invest is because they don't have the money to.
That's correct.
Well, if you're looking at an $8,000 to $12,000 per year savings, imagine what that would be like if you were investing $8,000 to $12,000 per year.
Yeah, that's
So what we like to do is teach people how to minimize their taxes, eliminate their debt,
right.
and ultimately free up that cash that they need to start investing. Because if we started talking about investing, there's only 2% of people in retirement age or heading towards retirement that have an adequate amount of money in a retirement where they can maintain their current lifestyle as they live today. So 98% of people are going to be in for a rude awakening when they hit retirement age because they don't have enough money saved up. And we can talk about some of the reasons that they don't or what's keeping them from getting those things put in place. But understand that the home-based business can save you $8,000 to $12,000 per year in tax burden. And if you have that $8,000 to $12,000 a year, 9 times out of 10, you wouldn't have the debt burden that you have because you wouldn't be in debt if you had an extra $8,000 to $12,000 a year.
Yeah, and I recently took a training with um, was it Guardian Life Insurance? They gave free CPE, and let me tell you an example of how the tax code is beneficial. Did you know? And so I'm just trying to keep it high level, not get into details.
Mm-hmm.
That when you talk about investments, do you realize that there are investments that you can get when you're a business owner to where you can have an IRA, you layer a life insurance policy in it, and then when you sell your business, you're basically self-funding your buyout, and that reduces your taxes.
Wow.
And that's legal in
Wow.
the tax code. And I got training on that.
Wow.
Now,
Mm-hmm.
Guardian wants so Guardian tells us CPAs that because the objective is, it's for them to make money so that if I have a client, when I get a client that has a situation, they want me to go refer
Mm-hmm.
business. But that's just an example of how you can take money and you can even get business loans to set these things up, right? Take cash, create a
Mm-hmm.
IRA for yourself as a business owner,
Mm-hmm.
layer a life insurance policy, structure it correctly in there, okay? And
Wow.
then you have a buy sell agreement with say an employee. And then when you sell the
Mm-hmm.
business, the employee's not gonna have the money, but the money is there for you and you reduce your tax burden. Also, from speaking with other CPAs, there are other ways. There are ways that you can have a multi-entity firm that I'm being taught right now. Set yourself up with multiple entities. Okay,
Mm-hmm.
you can buy equipment from one, lease it to the other entity, and then you can sell them back and
Wow.
forth and keep your cash tax free. And guess what? People are saying like that's illegal. No, it's not. I've done the math. It's legal. It's in the tax code. And I'm not going to say who taught
Yeah.
me that because I don't want to get hate mail when I blast this out.
Right.
But
Right.
so this, so ladies and gentlemen, I cannot tell you enough. The tax code is not made for you as an employee. Now, not everybody's meant to be a business owner. Let's just be real about that. But if you're not
Mm-hmm.
happy with the reality, I just gave you a couple of tricks that I know of or am learning that these wealthy people like Donald Trump, Mitt Romney, Damon John, so hey, so these
Damon
like
John.
African
Yeah.
Americans, Magic Johnson,
Yeah.
they do these things every day. They pay, and people
Exactly.
wonder why they pay these CPAs, $10, $50,000, $100,000 a year because they're saving millions of dollars a year. Now you have to be a
Exactly.
millionaire to hire a CPA, but these are things that we have to offer that you're not going to get from H&R Block, and you're not going to get from a road agent.
Exactly. And it makes a difference in the long run because what we're talking about is we're talking about building wealth.
Right.
And see, what I understand is that income is measured in time in dollars.
Mm-hmm.
Wealth is measured in
That's
time.
correct.
And when I'm talking about wealth and I'm thinking about time, I'm thinking 4, 5, 6, 7, 8, 10 generations
Right.
of time. So when you build your wealth, it's the tax code that also helps you protect that wealth from people like the government.
Mm-hmm.
Because if you don't have your stuff structured properly, then you're getting into probate taxes and all that kind of stuff, and they'll take that wealth back from you.
Right. Right.
A good CPA
Yeah.
and a good estate planner
Yes.
will put you in position to make sure that your wealth is passed down from one generation to the next
Right.
with as few tax dollars being taken from it as possible, and sometimes without any tax dollars being taken from it because they understand who created the tax code and exactly why it was created. It was created for business people, by business people, for them to generate wealth and protect their wealth as they're passing it down from one generation to the
That's
next.
correct. And you mentioned probate. So something I learned is that I just moved here to California, and I split residency between here and Texas. So
Mhm.
um, one thing that's unique about California, in Texas, you can set up a will, and if you die there, your the stuff written in the will passes on. Now, obviously, financial instruments, as long as they're a designated beneficiary, get passed on. They don't get held up. But in California, those items that don't have designated beneficiaries, if you leave your assets in a will, it will be held up in probate for up to 2 years in California, no questions asked. And so I'm
Wow.
actually meeting with a probate attorney this Friday to, since I'm new to dealing with California business, to learn about that and form a strategic partnership. So I had
Mhm.
just gone to a training about estate planning, and that is a real issue. So it's funny you mentioned that, and I see you seem to be very clairvoyant tonight, man.
Man,
I didn't tell this
you
guy
know
about all
it.
these trainings, and now he knows what I've been doing outside Texas. People think I go to
Well,
Los Angeles to this party, and I'm taking trainings in the background.
no, man, and to your point, and me being clairvoyant, it's not about that. When you can't talk wealth without talking about all of these things
Right.
combined. So that's where poor people and wealthy people differ.
Yes,
See, poor people think that wealth is only about money.
that's called being
Well,
rich,
you can
by the way.
get income. That's riches.
That's rich.
Riches and wealth are two different things.
Correct.
I can hit the lottery and have a lot of riches, but if I don't protect that money and don't do the right thing with that money,
It's gone.
that doesn't necessarily equate to me being wealthy because we know tons of lottery winners who have gone broke within 3 years of winning the lottery.
Right.
But all of those things work in conjunction. And what does all of those things have in common? The tax code.
That's right. That's right. Because for instance, professional athletes, most of them go 80. I say 80 or 90%. Dr. Watkins put that in a newsletter recently. I've heard this several times. So we'll say 89% of those guys are broke within 5 years
Mhm.
because they're not invested or they don't make sound financial decisions. And so,
Yeah.
what people don't realize, so again, now I'm gonna, give let you guys in behind the curtain. So I don't do LeBron James's taxes, okay? But
Hmm.
the tax code does allow for these professional athletes to set up corporations for themselves.
Yes.
Okay. And so what these high paid athletes do is they set up a S corporation, C corporation. Now, a guy like LeBron's gonna have a C because he makes more than $25 million annually. So he could take a C
Hmm.
corporation. Okay. Now, I don't know what the NBA Player Association agreement allows, but theoretically, he could be getting his NBA check paid to his corporation. Okay,
Yeah.
all his endorsement money that he gets paid is getting paid to his corporation, not to LeBron James himself. And then LeBron
Mm.
James did have a payroll system set up to where that once he gets money paid to the corporation where he runs the payroll, he's having taxes withheld. Then LeBron, for any expenses that
Exactly.
he has for his basketball, he's running them through his corporation.
Hmm.
And so,
Exactly.
a lot of these players, some of these players are not paying 50% in taxes. I do know a former player that did, and so he had a CPA that got him set up on the S
Hmm.
corporation. His tax burden went down because he was able to write off his Gatorade, write off his shoes, because that's
Right.
because he's in the business of playing sports, and these are things that are
Exactly.
legal. But
And
wealthy
again,
people don't
it
talk about
goes
that to
back
a
to
poor
not
person
knowing.
because they don't want you because we have that crab mentality. We don't want we
Hmm.
they don't want you to know what they're doing to save money because if poor people knew that and realized how easy it was success, then the wealthy people's wealth
Hmm.
is not as valuable anymore.
Right. Exactly. And when you mentioned that the story that I read about of an entertainer doing that, not necessarily a basketball player, but an entertainer, was Arnold Schwarzenegger.
Yep.
From his very first movie on, the production companies and the movie houses cut a check to Arnold Schwarzenegger, the corporation, and Arnold Schwarzenegger received a salary from the corporation,
Right.
and that was just another way of saying that, hey, I know what I'm doing. I'm going to protect my wealth and not let it get overly taxed.
Right. Right.
And
Yeah.
we get to play that game if we set up a home-based business.
Yes.
But a lot of people are letting fear stop them because they won't research and learn the strategies and the laws for themselves.
That's correct. And with Schwarzenegger, I don't know the details, but Schwarzenegger, he actually started. He did real estate and made $1 million, and so by him having a corporation like that, he can also invest in businesses or assets and have that corporation operate at a loss. And so his corporation then doesn't have to pay taxes because at his level, he's going to have what you call a C corporation. And then that C
Hmm.
corporation can carry forward that loss in the future. So his company makes money, he gets a loss to eat it, and then he pays himself a salary, and then he has a W-2, and the W-2 he just has his
Hmm.
taxes withheld, and he's not having to cut a check to the government.
Right.
All like
Exactly.
Donkey
Or he
said,
can
only in America. Nobody. So
or he
when
can
these
have
so what people don't understand, when these corporations are telling you the tax rate is too high, it's a high tax rate, but
mhm.
the effective tax rate these corporations pay no different than the rest of the world. It's just that these corporations are tired of paying lobbyists to lobby the tax code, but they're not
Hmm.
paying the taxes that they're telling you to. It's just that we're not a financially literate society.
Exactly. And the net effect. So the tax rate doesn't change, but the net effect, because of all of the deductions,
Right.
basically lowers their tax liability. Uh, so man, this is good stuff. I hope people will take heed because it's to me, I'm all about building a legacy for my family. I'm a father of five sons, and not only building a wealth legacy, but also I heard a quote today on a webinar that I was doing before this one, and the young lady said that all wealth is taught,
Yes. Yes.
basically meaning that if I want my children to be wealthy, I don't just pass them down a boatload of money. I have to pass them down the knowledge on how to build wealth so that they can take the pennies that I leave them when it's my time to depart from this earth and turn those pennies into dollars. And that's the name of the game for me. That's why I study this stuff. That's why I partner with guys like you who know, who are constantly being trained and learning new stuff. So I get to pick your brain a little bit.
Yeah. Yeah. Yeah.
And I love your video series that you do on your tax tips because I use all of that stuff in my education to as a wealth strategist to bring to light this information to people. And sometimes people come from such diverse backgrounds and they have so many stigmas about them and their money that I have to come from 1,001 different angles. So I have to keep learning myself. It's almost as if I'm in some sort of continuing education class that I'm required to have because I just want people to know that there are solutions to these problems. You know, the number one challenge that you're going to have is you're going to have inflation.
Yes.
The currency that we use is going to always lose value based on the system
Right.
that it's created in.
Right.
And then you're going
It's
to
called
have
fiat
taxes.
currency.
Yeah, it's basically a debt instrument. So when a dollar is created, there's debt created simultaneously.
Right.
So if you think about that, if there was no money in the world, right, and you use a system like this, and one single dollar was created, but because it's a debt instrument, that single dollar is created with debt attached to it.
Right.
So that means there's only $1 in circulation, but what is owed is $1.10.
Well, at
How
least.
the hell can I pay the 10 cent? There's only $1 in circulation.
Right.
So even when I pay the $1 back, I still somehow owe 10 cent that doesn't exist.
That.
So when you
Yeah.
understand that about your money, then you know that inflation is going to have a big effect on you, especially when people are looking to set up retirement. One of the challenges that's keeping people from getting where they need to be from a retirement standpoint is because if you're living comfortably today on $5,000 a month and you're going to retire 18 to 24 years from now, the cost of living is going to double.
Yes.
Most people are planning their retirement so that their retirement pays them $5,000 a month because that's what it costs them to live today.
Right.
By the time they retire, they're going to need $10,000 a month. So they're not considering inflation in their retirement planning.
That.
They're also not considering taxes
No.
in their retirement planning. Now, here's something that blew me away. I have a young lady who is retired, and she's a business partner of mine with the Young Wealth Builders. And she's retired, and I did not know that she pays taxes on her retirement income.
Yes.
So she was able to adjust her W-4 form and get some of that money back in her household. But I'm like, you worked for 30 years, pay taxes for 30 years while you retire, then draw your retirement, and that's taxed just like you was if you were working. So
Yes.
that's ridiculous.
Yes, it is. And by the way, there you can put money in a Roth IRA and not get taxed when you withdraw the money because it's post-tax dollars. So this lady put all her money in pre-tax dollars because of the tax benefit up front. So because they gave you the tax pre-tax dollars up front, they have to
Hmm.
tax you when you withdraw. And what people don't realize with those kind of investments is that you have withdrawal minimums. And also, Social Security set up that if you withdraw before you're 70, you don't get as much money if you withdraw 65 than 70. So the system is not fair. The system is rigged. So that's why it's important to build wealth. And earlier I did the four because Cortez, we talked about for a dollar. I put four for the audience knows that in most instances, when you're a business owner, you can borrow up to four times what you need.
Hmm.
So
Wow. Wow.
if you have $100,000, you can borrow 400,000. But that's the difference
Wow.
between a business owner and a W two.
Yeah. And being a W-2. So this is crazy. So we talked about inflation, we
Right.
talked about taxes, and then debt is the third challenge that you have to overcome if you're going to talk about building wealth. Because if you think about what debt really is, it is the counter to your wealth building efforts. Because every dollar that you're paying interest on in debt is a dollar that you're not earning interest on as an investment.
No.
So that's why you can't build wealth and be drowning in debt at the same time because it's almost impossible to be earning interest and paying a heavy amount of interest at the same time. But people don't look at it that way because we've been socially engineered to believe that debt is normal.
Yes. Yeah, and that's the difference between debt as a consumer versus what I told you in the scenario where you can take on debt.
Mhm.
Like Elon Musk, But if you heard of him with Tesla, he uses debt, business debt to build Tesla. But there's a difference
Right.
between doing that and the debt that you're talking about, where we're getting a debt because we're buying Jordans and the latest
Exactly.
baseball gear
Yep.
and the like. So that's the difference.
Yep. And then the final challenge, it could actually be the first challenge, is poor cash flow management decisions.
Yep.
And I fell victim to this myself, because the way that it happens is, well, I'll speak for myself. I won't speak for anyone else. But when you're working a job and you're living paycheck to paycheck, you literally feel like you deserve to do something with your money other than pay bills.
That's right.
So at the end of the year, my wife and I did this for a couple years in a row before we found out about true wealth building principles, is we wouldn't pay our mortgage in November and December because we wanted our children to have a nice Christmas.
Wow.
Now, sounds crazy to most people that you would jeopardize the house that your kids have to live in
Uh-huh.
so that they can have nice Christmas. But for them to being partially socially engineered as children, and us as parents, that just seemed like, the only option that we had, versus sending them to school where they will be antagonized by their friends and their peers that they didn't get anything for Christmas because mom and dad couldn't afford it.
Right.
So that was the kind of vicious cycle that we were in, and I know other families are in cycles similar to that. Then you get to January, now you're trying to get a payday loan to pay November's mortgage, and then you want to, you just get caught up in a vicious cycle, and that's where we were financially, because again, financial literacy is not taught. This is information that pretty much has to be passed down. So if you're listening to us here tonight, research the tax laws, research real wealth building principles, research how capitalism really works, how investments really work, so you can pass the knowledge down to your children. Even if you don't get the opportunity to actually build the wealth yourself, you can still pass the knowledge down to your children and they can do something with it. Don't let them start from zero and not have the knowledge. So even if you struggle and you can't get the wealth built up, at least they have the knowledge so that they're not starting from zero. They may not have any assets to start with, but they have the knowledge to apply to acquire the assets. See, I came up with my mom not knowing any financial principles. I'm basically was raised by a single mom. So not only did I not have any assets when I turned adult, I didn't have the knowledge to acquire any assets either. So what I'm saying is, learn this information. Get books by Dr. Dennis Kimbrough,
Yeah.
Kiyosaki, Dave Ramsey, all of these folks, and start learning so you can at least pass some knowledge down to your children if you're not able to acquire the asset yourself. But one asset everybody should be passing down is, you should have at least a life insurance policy that will not only cover your burial expenses, but will also clear your mortgage if you have a mortgage, and then leave some money to the children. So if you do nothing else, life insurance policy that will at least get them a house free and clear that they all can live in, and have that as an asset, a few dollars that they can have. But you pass down that knowledge, and they get a few dollars from an insurance policy or something like that, they can take $10,000 and turn it into Warren Buffett type money, because he started with like $100,000 or something.
Right.
So,
Yeah.
but he had the knowledge.
Right. And by the way, you mentioned life insurance policy. Just for people to understand, you can get a term life insurance policy, which I do have, and I won't say the amount because the beneficiary might watch this and get crazy ideas. But even as a single person, you should have at least minimum term life insurance. If you pass away for some reason young, then all my debt, my expenses be covered and then some. But there's also another
Hmm.
type of term, life insurance policy called cash value, and where when you put money into it, the value of the policy grows, and again, you can make withdrawals, reduce your taxes through the policy, and use it to pay your bills. So, for those of you who are interested in a cash value policy, contact me. You can find me on Twitter at Bedrock CPA. I can also be reached via telephone at 619-800-6852. You can also email me, Eric at bedrockinsurance.com. I can get you in contact with somebody that I know that I'm partnered with that sells those kind of policies. And I promise you, when
You
you
said, give me your Twitter handle again at
at
Bedrock
Bedrock
CPA.
CPA, yeah. So yeah, there you can invest in a cash value life insurance policy. The money grows, and what people use this to withdraw from to pay their expenses, basically tax free. So these are things that tax code allows. So sorry, wealthy people,
Hmm.
I gave away your secrets, but it's time for other people that have money to invest in themselves and better themselves and their family. And that's what I'm in this business for. And I would say my catch line is that, me and my team at Bedrock Insurance, we're here to help you keep more money in your pocket and less in Uncle Sam's.
There you go.
Yeah.
Uh, Super awesome, man. We're approaching the top of the hour.
Yeah.
So I'm about ready to turn in
Same
myself.
here.
I said I wasn't going to be doing any talking, trying to let my vocals heal. Uh, and just to give you an example of when we say have a home based business and how you can write off your lifestyle, I'm a youth basketball coach, and we were talking before we started, before we became live on the air about me being in Indiana coaching a basketball tournament. Well, guess what?
Mhm.
Because I have a basketball academy that I promote when we travel to these tournaments and things, the miles that I drove to Indianapolis from St. Louis are tax deductible.
Yeah.
The meals that I had purchased for my son and I
Mhm.
were tax deductible. Our lodging is tax deductible. Even the money that I gave to my son is tax deductible. Why? Because he's an employee in my business.
Yeah.
What shirt do you think he wore when he warmed up in all of his games? He played 8 games in Indiana.
Wow.
So, what shirt do you think he wore during all of his warm ups and he's walking around in the tournament, in the venue,
Your shirt.
playing around and doing all that
He's
stuff?
wearing your shirt.
Of course, he wore the shirt that says St. Louis Elite Basketball
Love it.
Academy. So he gets paid for helping me promote my basketball academy, and the salary that I pay him is tax deductible under $6,000 per year, and it's tax free for him.
Yeah.
So
By the way, we need to work on getting your favorite CPA logo on those basketball jerseys.
yeah, man, let's do that,
Yeah,
man.
I'm
Let's
serious
do
because
that,
I
man.
do.
Yeah,
I've sponsored one athlete in the future.
yeah,
So I want
let's
to
do
get
that,
exposure
man.
to the Midwest. But also,
Yeah.
what people understand when you have a home based business like yours, when you take a vacation, the IRS says if you have business appointments, you can write off some of your vacation.
Hmm. Yeah.
Trust me,
Yeah, and
when this was
that's
a side business, I used to ride my vacations. And I have calendar appointments with legitimate
exactly.
business contacts when I was prospecting here in San Diego and Los Angeles. When I'm in
Hmm.
Chicago, I had legitimate business contacts. Shout out to Emily, let me in at the LinkedIn office to talk about some business and things I could do for my business. So when I was in Chicago for a
Yeah.
wedding, I did have a legitimate appointment with somebody in LinkedIn at their sales office there, and I got to ride off most of my Chicago trip, and it's legal.
Yeah, and it just so happens that you were at a wedding during that same time.
Absolutely, yeah. I just happened, my cousin Cynthia married her husband. Just happened to the same time the LinkedIn appointment. I don't know how that worked out.
Say, what do you know? You're getting married? I'll be in
Wow, I'll be in
town hollering at
Chicago
some
at the
folks at
same time I'll
LinkedIn.
have a meeting with the professional at LinkedIn sales office. So,
Yeah,
and
yeah.
I'm sharing these things because people tease and say, Eric, you have a lot of fun, and I do. But I'm saying it
Hmm.
because there are meetings that go in the background while I'm at these cities, and I'm getting to write it off. And I wanted to share that tonight because for people
Yeah,
that are on the fence starting a business, you can do the same thing. And even when you're a corporate employee, you can have a small business selling Senti at home, at your home, or Mary Kay, or you're
exactly.
working a job. to get ready to go yourself. And so, and ultimately, the point,
Yeah.
one of the great benefits of being a business owner is that I get to pick the 16 to 18 hours that I work. I don't have a boss I'm going to come in at 8, leave at 7. My
Exactly.
we got a memo saying we had to be in the office at 8. We couldn't leave till 7 in January. That was
Wow.
January 2015. That was depressing.
Yeah. 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 I don't want to hear nothing like that. So really quick, Eric, one more time, shout out how the people can get in touch with you, so that if they want tax prep help, I know we're beyond the traditional
Right.
um, tax prep dates, but they can get tax prep help. But again, a good CPA is giving you tax prep help all throughout the year and
Absolutely.
preparing you for the following tax prep season, not just in January and February, like a lot of the big box
That's
stores.
right. And just to let you know, I've actually just got a client out of my hometown of Houston. Um, they had to file an extension. So tax returns are still done through October, first of all.
Awesome.
Second, to find me, you can find me on Twitter at Bedrock CPA. For those of you that are not watching this live on Blab, because when this is repurposed, you won't see our names and Twitter handles there. You can also find me on Instagram at your favorite CPA. You can find my business
Mhm.
page, type your favorite CPA. You can find me there. You can also find. I'm also just now started Snapchatting, which I feel like an old man doing that. You can find me there at your favorite CPA, and also you can call me or text me. My phone number is area code 619-800-6852. You can also email me Eric at bedrockinsurance.com. And if you're here in San Diego, you can also watch me on the show The Neighborhood SD, which is at noon on CW6 every Sunday, where I give free financial tips. So we recently released new content for the month of June, and you can see my episode where I tie physical fitness and financial fitness from the video I recorded at Fit Athletic. So shout out to Fit Athletic and to the general manager, Mike Mitchell. Thank you for letting me use your gym for the TV show recently.
That is super awesome. So get with my main man, Eric Pierre, your favorite CPA, and let him help you out with any of your tax and also your financial needs as he's starting to spread his wings a little bit and give some good financial mentorship as well. Got to get with the Snapchat though, man.
Especially with your
Not with the
basketball,
Snapchat.
your son should be
Yes,
doing
yeah.
it.
I mean, I'm certain that he is. I'm not. I am. I'm sure he's got
Yeah,
Snapchat and all that stuff.
it's
Um,
hard because I don't want to be Snapchatting someone's tax return. In fact, I have a realtor that has sent me their tax return that I need to reevaluate, and I don't want to. It's
right.
challenging because I have
Got
to
you.
choose wisely. So I'm
Got
saying, hey, I got a client that owes $200
you.
to us. I'm trying to reduce their. Here it is. Here's the social
Cool,
security
cool,
number.
cool.
Here we go. Oh my gosh, you should take
Well,
advantage of this deduction. So
got you. Got you. Well, Eric, my man, it is always a pleasure to chop it up with you. You are a wealth of information. Uh, not every CPA knows their stuff as well as
thank you. I
you.
appreciate that.
Not every tax preparer knows their stuff as well as you. So it's always a pleasure, man. And I'm going to be sharing bits and pieces of this
Right.
conversation probably for the next few months or so. But to reach out to me, you can catch your main man, H Cortez, the one and only financial health mentor to the working class. I'm on Facebook most of the time. So if you go to my business page on Facebook at Financial Health Mentor, you can also catch me on YouTube. I do a lot of videos and free advice and free tips and strategies on YouTube, which my YouTube channel is also Financial Health Mentor. I am on Instagram, Financial Health Mentor. Don't post as regularly on Instagram as I do on Facebook.
Right.
That's probably my main hub. And then at Cortez Springer on Twitter. And then if you want to get me by phone, here's the trick that you have to use.
Okay.
Text the word wealth to 314-874-6887. I don't know about you, Eric, but because I put my phone number so much out there on in cyberspace, I get a lot of telemarketing calls. So I usually don't answer those calls. But if you text the word wealth to 314-874-6887, I know you're serious because the robot dialers don't know how to text just yet, but I'm sure they're trying to figure it out.
You know
Trying to figure
that
that
day is
thing out.
coming though, because Jason
Yeah,
Calacanis, you've seen that video from Colin Cowherd. There are a lot of corporations that are investing in robotics. In fact, the robotics
yeah,
are sophisticated now; they can serve an entire Starbucks. So that day is coming soon when robots are texting.
yeah, yeah. It is
So
coming.
start your own
So if you
business,
want to
guys,
know,
because robots are
yeah,
replacing people in the workforce.
exactly, because
It's gonna
they're
come.
coming. So
It
you
ain't
want to have your wealth already built.
right.
Otherwise, you're not going to have
You're not gonna have a
anything
job.
to start to build wealth with if they have all the jobs. So,
Right.
guys, again, it was a pleasure, Eric. Catch us on any of those platforms, and really look at starting your own business. And even if you can't run a business, you can still own a business. Partner with someone who can run a business,
Right.
and you guys split the profits. Maybe you become a financial backer to someone who's really good at running a business. But if you are investing in a business, guess what? You still can take advantage of the 475 tax deductions
That's right.
available to home-based business owners. So get out there, get rid of your fear, and go ahead and get started in business. If you want to partner with me or Eric as part of the Young Wealth Builders team, we can definitely help you out in that arena. And then if you want to get a downloadable copy of the book that we wrote together, Financial Health Traffic Report, Overcoming the Financial Challenges Keeping You from Your Financial Destination, you can go to hcortez.com or hcortezthornton.com/free download, and that will be in the show notes. So you can just click there, put in your email address, and you can download a free PDF copy of that book to learn more about these strategies. So until next time, my friend,
Yes.
um,
Yes. One last thing,
I
Cortez.
will.
I also just want to give a quick announcement. If I
Yep.
got your permission to do this. Cortez and I, we will be doing a video project this summer in St. Louis.
Oh yes,
I haven't
yes.
finalized my travel arrangements because of training, and also I got a good friend of mine that also have a birthday party
Hmm.
to time when I go back home. But I will be in the Midwest this summer. So yes, my friends in Chicago, I will be in the Midwest, but I will be stopping in St. Louis first to do some business, and then I'll be transacting business in Chicago. So we will be
Yes.
continuing to do more blabs. If you follow me on Facebook, I will have this video, and I will trickle it out next few, probably next couple of weeks, because it's
Eh,
hard for people to sit through a whole hour at one time. But
right.
it'll be partitioned off. But we will be doing a video series from the city of St. Louis. I will be partnered with myEcon to promote home-based businesses. Uh, to be honest, quite primarily the African American community, we struggle to do this, but it is for anybody. But I am partnered with my econ this summer to do a video series with H Cortez, and we'll actually be together physically to do a couple video projects
Exactly.
that will be released later to educate you about home-based businesses and debunk some
And
myths.
wait a minute, Eric. Do this for me. You are a licensed, practicing, certified
Yes,
CPA,
that's correct.
certified public accountant,
That's right.
and you're talking about partnering with myEcon to teach
That's correct.
home-based business strategies and why that's important and how it can benefit you on the road to building wealth. I just
Absolutely.
have to get that out there because sometimes people challenge us on what it is that we do and the information that we share.
Right.
Trust me, guys, Eric would not be a part of what we're doing as a certified public accountant if what we were doing was not legal, ethical, moral, and legitimate. So, as a CPA, he is a part of the team here with myEcon, and we will be doing a series of videos this summer as we finalize the schedule. But I just thought I emphasize that so that people know, because some people will let a tax preparer tell them not to partner with us and things of that nature. So Eric Pierre is a certified CPA and
Right.
practicing CPA who owns his own company, Bedrock Assurance. He would not be putting that on the line if what we were doing was not
That's
legitimate. So
correct.
I just thought I'd throw that little piece in there,
Thank you.
Eric.
I appreciate that. I look forward to coming back home to the Midwest. A lot of people do know that I did grow up in Houston, but I was born in Midwest. Spent the first part of my life there, and I did spend a couple of years in Chicago, which is actually my adopted hometown. Now that I consider the West Coast home, but Houston is where I'm from. Chicago is my home. We do make fun of you, St. Louis sticks over there, but I'm willing to put that aside for the purpose of
It's all good, especially now since the Cubs are on fire
I
a
don't
little
like the
bit the
Cubs,
last
by the
couple
way.
of years.
I
I
was more
get
of a
it.
White Sox fan when I lived there, but I'm actually an Astros fan first and foremost since I'm fused. And the
Gotcha.
White Sox blasted
Gotcha.
my Astros, but now I'm a Padres fan, and I do have partial season
Gotcha.
tickets. And what's great is like, let me show you something about Texas. You see this? I'm gonna show y'all this. So see this? See this branding? This is
Yep.
advertising because hashtag your favorite CPA. That is a trademark name that I own. Okay, which I do own. So if you see another
Exactly.
CPA calling says your favorite CPA, let me know. So me and my lawyer will have a chat with them. So
That's
whenever the
right.
Padres
That's right.
games, I get to write that up because that's advertising. I've been stopping the street and discuss taxes, and then also have a baseball jersey that says hashtag your favorite CPA in the back with #1 authentic Padre gear that I use for a texted video that was in the neighborhood, and that's a tax because that's an advertisement, and because it's an advertisement because it has my business name on it. See, these are
Exactly.
things that CPAs
Exactly.
know. And lastly, and then I'll let you go. And the reason I know this is because, for instance, it's the same thing for giving gifts. So, for instance, if you give a gift, you're limited to $25. But if you give something to a customer and you put your company branding on it, like your favorite CPA, which is my company's trademark name, marketing name,
Mm-hmm.
there's not a cap on giving that to a client anymore.
Ah, so you telling me I got to start putting financial health
Yes,
mentor on
yes,
everything?
yes. That is the quote.
See, that's why I mess with my man Eric, man. I told you I'm always learning,
Yeah,
always
yeah,
growing.
yeah.
Uh,
And I was reminded of that in the presentation because realtors in
mhm,
California, this company, I can't think of the name of it right now, but Eric Gilman did this presentation, and
mhm.
so realtors give knives, right? And so you can buy a $150
Uh-huh.
knife, but they put engraved
Okay.
the name of the realtor, and they place it in the kitchen because the kitchen is the most used spot in the house because they said
Right.
real most homeowners do not use the same realtor again because they don't remember the realtor's name because the realtor did not do a good
Mm-hmm.
job of marketing themselves and keeping the context. So the best way was to get something like a knife that's imperishable that they're going to use. And it's always in the kitchen.
Wow.
It's got their name, it got their business name on it with their contact, and it's now advertising. And so instead of only giving a
Yeah.
$25 gift, now you can buy a $150 gift and give it to somebody. It's considered advertising. So what I
As
did
long as
was
it's
what I did
branded.
during tax season, I bought a bunch of hoodies, and so on the back of it, it said your favorite hashtag your favorite CPA in front of it had my company logo, not limited to
Mm-hmm.
$25. This is advertising. So when
Wow.
people walk around
Gotcha.
California and Texas, they're walking billboards for me. So thank y'all. God bless y'all. So they got to enjoy hoodies, they got
Gotcha.
a tax break and free and cheap advertising.
Gotcha. Gotcha. My man. My man. So, guys, until we talk to you in the next video, the next blab, we're going to do another couple series until Eric gets to town where we can sit down live and chop it up. I want you guys to start a home based business and get your money up
Yes, sir.
because you can do it.
Yes, sir.
We're
We're
out.
out.
Peace.
Thanks, man.